Use on-chain data to understand Bitcoin. Welcome to Mr. Big. Here is the key point. Bitcoin is near $61,579, while the true market mean sits around $77,253. The AVIV ratio is negative 0.203, almost sitting on the -1 standard deviation zone. That is not a casual dip reading. It says the market is trading in a compressed investor value area. Before we read the chart, we need to understand why AVIV exists. AVIV stands for active value to investor value. The IV here is investor value. The simple formula is AVIV equals active cap divided by investor cap. And investor cap equals realized cap minus thermocap. This matters because AVIV is trying to isolate the capital actually contributed by investors, then compare it to the value carried by economically active coins. Realized cap is powerful, but it includes coins originally issued to miners. Thermocap is the aggregate primary issuance value paid to miners over the life of the network. When we subtract thermocap from realized cap, we get investor cap. In plain English, we are stripping out the miner issuance component and asking, how much capital has the investor side of the market effectively put into Bitcoin? The other side is active cap. It comes from the coin time way of thinking. Coins that remain dormant for a long time are not expressing much current economic activity. Coins that move, reprice, and participate in the market carry more information about current investor behavior. So AVIV asks a sharper question. Compared with the investor-funded capital base, how hot or cold is the active economic value of the network? This is where AVIV differs from MVRV. MVRV compares market cap with realized cap. It is broad, simple, and still very useful. But it treats the full realized capital base as the denominator. AVIV is more selective. It uses active cap on top and investor cap underneath. So MVRV asks, is the market price high or low versus aggregate realized cost? AVIV asks, is active economic value high or low versus investor-funded value? Now look at the latest reading. AVIV is negative 0.203. The -1 standard deviation band is roughly negative 0.23, and the -1.5 band is around negative 0.445. So the current reading is very close to the lower valuation band, but not yet at the deeper capitulation band. That is an important distinction. It is stressed, but it is not the deepest historical washout zone. The important chart relationship is now simpler. Bitcoin is near $61,579, while the true market mean is around $77,253. That means spot price is trading below the investor value mean, and AVIV is still compressed near its lower valuation zone. If price can reclaim the true market mean, while AVIV turns higher, the market can begin repairing. If price stays below it, and AVIV remains pinned near the lower band, the stress phase is not finished. The professional read is balanced. I would not call this a clean, bullish confirmation. Cheap can become cheaper, especially when liquidity is poor and holders are still defensive, but I also would not ignore the signal. When AVIV compresses toward lower valuation bands while price trades below the true market mean, the market is telling you that investor value is under pressure. These are the zones where long-term opportunity can begin to form before the emotional consensus feels ready. The point is not to romanticize drawdowns. The point is to separate weak price action from actual valuation compression. A falling price by itself is not enough. But when the price decline lines up with investor value compression, the signal becomes much more interesting. The next checklist is simple. First, can Bitcoin reclaim the true market mean around $77,000? Second, can AVIV move back above the -1 standard deviation band and hold there? Third, if price remains below the true market mean while AVIV stays compressed, does the market quickly recover, or does it accept lower valuation? The answer will separate a repair phase from a deeper stress phase. I would also watch the shape of the recovery. A fast reclaim with AVIV rising suggests investors are starting to reprice value again. A weak bounce that leaves AVIV pinned near the lower band suggests the market is still fragile. My core view is this. Bitcoin is compressed relative to the AVIV investor value framework, but it is not yet repaired. The market is below true market mean. AVIV is near the lower band. That deserves attention, not blind confidence. The signal says value pressure is real, and the next move should be judged by whether AVIV and price can reclaim the bands above them. Until that happens, the cleanest read is simple. Value is showing up, but confirmation has not. This video is personal research based on public data only. It is not investment advice. Remember to like and subscribe. Thanks for watching, and I will see you next time.